All right, everybody, welcome to the November 2025 monthly market report. I am Adam Hopkins, your host, and I appreciate you being here. I'm excited to talk about everything that's happening in the real estate market right now. My goodness, there's a lot happening. So we're recording this midway through November, and a lot has been happening. So housing affordability, we had elections here recently, and in Virginia and in the United States. Housing affordability was one of the top topics that was brought up by politicians wanting to earn our votes. And the ones who won, that was one of their areas of focus, a big focus. So we're going to talk about that. We're also going to talk about what's happening in the real estate market in general. As we go through this journey for the next 20 minutes or so, I'm also going to talk about some signs that we see the market is beginning to turn the corner. And that's an interesting thing. And we want to make sure that we're certainly paying attention to what's happening right now. I'm also going to give you guys some graphics and slides that will be really helpful this holiday season as we're getting into November and December, the holiday season. And we'll probably run into more people during this time than we have all year through holiday parties and everything else going on. So we want to give you the information that you need so that you can show people exactly what's happening in the real estate market. So with that as a backdrop, let's go ahead and get started. All right. Let's get started right here. The unsung hero of the housing market in 2025 has been the improvement in mortgage spreads, because without the spread improving as much as they have, mortgage rates would still be closer to 6%. That mortgage spreads would not have approached 6% as they have this year. The average spread between the 10-year Treasury note and the 30-year fixed mortgage rate historically has been about 170 basis points. As you can see here, as we look at this graphically, this is what it looks like over the last couple of years. It goes back to the beginning of 2023, as you can see over my shoulder here. And you see uh, the left side, just over 300 basis points, where we were a couple of years ago. And we've been coming down to about 200 basis points right here on the right side of your screen, bouncing there in the low too. So that's a good thing. That gives us a better mortgage rate. Mortgage rates are going to follow, as always, the 10-year Treasury note for the last 50 years. And that has been true. So we're staying on top of that. But then the Fed comes out and meets, and Federal Reserve Chairman Jerome Powell says that a further reduction in policy at the December meeting is not a foregone conclusion. Now, we were told 2 months ago we could be looking as much as uh, four rate cuts. So we've seen one, and now he's saying, based on the data he's seeing, that it's not a foregone conclusion that they're going to continue to ease and go through with additional cuts. Actually, far from it. There are strongly different views today in this current environment than there were 60 days ago. And the takeaway from that is we haven't seen, or we don't know what decision is going to be made for December. Again, if you're watching the monthly market report, I'm going to make the assumption that it's not the 30-year fixed rate mortgage that affects what the Fed does, but it's their policy and how it affects the mortgage business. And that sort of causes the markets to kind of take a pause if they see cause for concern. So there's not a direct correlation. There's not a direct, the Fed cuts rates and then the interest rate on your mortgage goes down if you're applying for a mortgage. But there are parallels, and the two do play off of each other. So, again, every politician mentioned home affordability as one of their top priorities in their campaign speeches. And I've been around for a while, and I can't remember the last time during an election cycle where this was pretty much universally the case across the board in terms of elections, both for the governorship and also for local representatives. So every city right now, here, let's take a look at the next one, is struggling with affordability. And as professionals, it's really important that we have a relevant market opinion on what's happening to be able to coach our clients and our friends and family and all regarding all the factors as it relates to affordability. But the other thing that came out of this Redfin study is they noticed that only 28 out of 1,000 US homes has changed hands in 2025. This is the lowest turnover rate in the last 30 years. Let that sink in. In the last 30 years, it's the lowest number of sales based on this metric. Now, we don't want to confuse turnover with tenure. Turnover is simply how long people stay in their homes. Turnover is how many homes are selling, like the velocity of home sales compared to population growth. So there have been several years where you may have had 4 million home sales, but based on the population growth that we're seeing, the metric does change based on that. So turnover is simply how long people stay in their home. That's turnover. I'm sorry, that's tenure. Tenure is how long people stay in their homes. And historically, that is between 5 to 7 years before people make a move. During COVID, that number dropped to 2 to 3 years. And right now it's pushed up between 8 to 10 years is how long people are currently staying in their homes. So that's a pretty dramatic difference when you're seeing things slow that dramatically. So that's something that we want to keep in mind. Um, so let's go to the next. So how many homes have sold per 1,000 US households? If you look at this graphically, this is what it looks like. All at the orange bar here on the right side, you're looking at 27.7, which would round up to 28 homes per 1,000 households. It's on par with last year, slightly lower than the year before. Now let's back up and say a couple things about this report. First, you should always look at when this is published. This is published covering the time frame from January to September. So this is pretty accurate. And I think as we go through October, November, December, we've obviously closed out October. We're halfway through November, and we still have December to go. But those months are pretty predictable based on historic patterns. We'll see a little bit more sales pace coming through just strictly from lower mortgage rates if those do continue. But if we look at this and you go back to say 2015, 2016, 2017, as you can see behind me, we jump up in 2021 to 44 homes per 1,000 sold, which was the highest turnover rate. And the first 9 months of this year is down to 27.7. Which will likely go down as the slowest home sale year when adjusted for population growth in recorded history. So pretty significant. A further reduction in the policy rate at the December meeting is not a foregone conclusion, far from it. There were strongly different views today, and the takeaway is that we haven't made a decision about December. Thank you, Jerome Powell. Now, projections are that we'll sell slightly more homes this year than we did last year. But let's call them even because there's not really a lot of growth year over year in home sales. And so that's what folks are talking about and what's really the case that we want to discuss here. But I'll break this down in just a minute, and we're starting to turn the corner and why that happens to be the case. The reason for this, the reason why I believe that the housing market is beginning to turn the corner and is going to continue to improve. There are really three main reasons that we're looking at here. Affordability being the biggest one. The challenges that have kept buyers on the sideline. And we're going to talk about that. It was talked about by, again, every political candidate who's running for office. And each candidate will make clear that this was going to be a massive issue as part of their platform. So we'll see what impact they can actually make once they take office. Because sellers are unwilling to give up their low mortgage rates, and the number of people that have a mortgage rate below 5%, as we're going to see, 70% of US homeowners have a rate below 5%. And the third factor is economic uncertainty has made buyers very, very cautious. As we know, a confused or scared buyer will not make a decision. They sort of said, look, here we're gonna wait and see, and certainly with the recent government shutdown, we want to make sure that's fixed before we jump into the market. So there are economic concerns and job growth and economic factors right now that people are kind of going, okay, what's really going on right now? So the reason I state this is you've got some good news on the spread coming down. That spread's beginning to narrow. And you have some challenging news and headlines popping up, like the real estate market is frozen and there's nothing happening and homes aren't selling. And the bottom line is that we always bring it back to is there are always homes that are selling right now. An existing home sales report shows that just over 4 million homes have sold at an annualized rate. And what does that mean? Here, well, let's take a closer look. What it means is every day, 11,123 homes will sell in the United States. That means 463 homes will sell every hour. That's 8 houses per minute every day in the United States. 11,000 homes will sell. The question is, what's our perspective on it? Oftentimes, headlines are built and engineered to terrify more than they do clarify what's happening. In the news industry, they have an old saying, if it bleeds, it leads. They always want to start with the dramatic because that hooks people in. Social media is also horrifically uh, potent at following this model. But it's not useful when we're trying to educate our clients on making one of the biggest financial decisions of their lifetime. So let's talk about what's happening. We're looking at two sides of the coin here, and I don't think it has to be good news versus bad news. It's just the news. It's just the reality of what's happening. If we know the facts of what's in front of us, we can make decisions based on our current situation. So I want you to understand this. And the point that I'm trying to make is as we go through this journey of the monthly market report, is the housing market is starting to move again. We've just gotten through this election cycle. We've gotten through a government shutdown, and the housing market is beginning to pick back up. Now, there are several reasons for this that I want to discuss with you. I'm going to give you the factual basis of this, and I would encourage you to grab some of this information and be the mouthpiece for what you see happening out there in your section of the market. Talking about the election piece, that affordability was talked about by virtually every candidate. We need to have an opinion about that. And people are going to say, well, what do you think about that? What are you seeing going on right now? What can we do to influence that? I think there's a lot that we can do, you and I, to help our clients navigate this. We need to have a great lending partner, and no doubt in the market, which can help our clients with additional questions. But this is from Odetta Kushi from First American, and his perspective is after a prolonged slump, the existing home market is showing signs of recovery. So he's seeing that from the lending side as well. Now, before we go any further, I just want to point out three reasons why the housing market is on the road to recovery. I'm going to go through and forecast here in a minute what's happening, but there are three factors that the housing market is on that road, and we're going to break these down here. The first one being mortgage rates have been decreasing for most of the year, which is we're in 2025, and they're lower than they have been in the last couple of years. That's incredibly important. Two, the lock-in effect is easing. The lock-in effect is more homeowners are selling and inventory is rising to normal levels. So as this lock-in effect eases, inventory and choices for homebuyers continues to grow. That means more options. And third, lower rates, lower interest rates, and more homes to choose from are leading to more buyers entering the market. So let's talk about what that means. First of all, this is a look at mortgage rates going back to the beginning of this year. And what do we see? Well, they're coming down. So yay, that's a good thing. Now I mentioned Federal Reserve Chairman Jerome Powell, his quote on the front end saying, we're not sure if we're going to cut rates again in December, which has had a reverberation effect in the mortgage market. And we're going to watch to see what happens. But the good news is mortgage rates are trending downward. Matter of fact, according to, I want to make sure I say this correctly, the Intercontinental Exchange, home affordability has hit its best level in more than 2.5 years in September which is driven by easing rates and pullback in prices. Now, this is huge. Home affordability hitting its best level in more than 2.5 years in September. This is, while there's still a massive challenge in front of us, um, this is why politicians sort of run to this issue. And I'm going to give you an analogy here to see if this helps to make sense of this. The way that the political system works here in our country is, think about it this way. If you're going to see a burning building, firefighters run toward a burning building, right? They want to put it out, and it's certainly a noble thing that they do. And if anybody's watching that has a loved one as a firefighter, obviously we're grateful for their work. So, because they go in and they help fix a problem, they solve an issue. And uh, politicians believe that they are the same. And I am in no way equating politicians to firefighters. Firefighters are the most beloved profession, I believe, on the face of the earth, because all they do is save people's lives. Politicians are kind of the fire starters on the other side. But the concept is the same. So what I mean by this is politicians see an issue and they run to it, like much like a burning building. And in this case, the burning building is home affordability, and they all say we're going to fix it. Now, most of them have no background in economics or housing, so they don't really know how they're going to fix it, but they know it needs to be fixed. So whether they can or they can't, that remains to be seen. But most times, what they do is they run to an issue. They say, I'll fix it if you give me your vote. And that's just the way that the political system works in the United States. And this isn't a political statement, but we will see what people can do about it. And certainly we want them to push legislation forward, or in some cases to get out of the way to help make housing more affordable and housing more accessible for all people. Now, there's nobody that's in our business that doesn't want affordability to improve. We don't want people that shouldn't buy homes. They're not suggesting everybody should buy a home. That's not what I'm saying. I don't know that it's helpful to have institutional investors like BlackRock buying up thousands of homes that would otherwise be accessible to first-time home buyers. So that's part of the issue here. But that's not in totality, but it is a piece of it. So housing affordability will be the biggest issue talked about by politicians moving forward toward the midterms in 2026. But the bottom line is housing affordability has improved slightly based on strictly looking at mortgage payments. The monthly mortgage payment, the median mortgage payment, going all the way back to May of this year, when they sort of peaked, to today, it has improved $300 per month. Now, that's huge. Like, that's significant. Um, Dropping almost 10% from 2860 down to 2530. That is a massive drop. Some people might say, oh, it's just $300. $300 is significant. That could be a month's worth of gas. Or more. So just keep that in mind. So I mentioned this, and I make a sidebar right here that there are three things that affect affordability. So if you're taking notes, you may want to write these things down. And if you don't know them, because you're going to want to study them, and you're definitely going to want to understand them so that you can form an opinion and help educate your clients on them. The first is the mortgage rate that's paid on the home. That's one of the biggest factors in the home as far as affordability. Where are rates right now? Rates have come down. That's good for affordability. The second thing is home prices. Mortgage rates aren't the only issue. It's a dramatic rise in price over the past few years that has also made affordability such a challenge for home buyers. So mortgage rates, home prices, but what do we know about prices? And I'll get into this more in a minute. They're not rising at the pace that they were earlier, kind of coming out of COVID. And so then the third factor that we have to take into account is wages. And so what do we know? Wages are climbing at a faster pace than what the last decade or so has shown us. And so this is actually a good thing. So affordability is still a massive challenge in our country, but we do see signs that we're heading in the right direction. So pay attention to this because it's going to be an area that's going to begin getting a lot of press as we get into 2026. So anytime there's something being talked about, we want to be able to talk about that as well, right? So when we're with our clients, our friends and family, if you are the knowledge broker in the market that you serve, it's important that you be able to talk coherently in an educated way about this as well. The next piece here is from the Intercontinental Exchange. Um, and I'm just grinning because I don't want to call it ICE because people will think it's something other than what it is. The Intercontinental Exchange. As of mid-September, 30-year rates were at 6.26%. Uh, if you're looking at the median income to make a monthly principal interest payment on the average price is down from 32% earlier this summer, where it had peaked at 35%. Now, that is still way too high. But the point is, we're starting to see some signs that that's improving. And that's looking at the total cost of housing was at 35% of household income, and now it's down to 32%. So we want to get that down below 30. Maybe not enough people get to jump up and down, but there are loan products that can help our clients navigate this, and we need to be able to understand it. We need to understand what's at our disposal relative to this. But the bottom line is we are beginning to see improvement in this area. So back to Odetta Kushi, a First American, said this: house buying power in September, the amount of home one can afford based on the median household income and prevailing 30-year fixed mortgage rate, reached its highest level since early 2022. That's a good thing. I think paying attention to these things right now will help keep you in line with what's being talked about in the world around us, certainly what's being talked about politically. Remember, I said politicians are going to run to the biggest burning building because that's where they're going to find the most votes. They're going to run to the burning building that people care most about. And this is the one right now that is at the top of the food chain and people care about it. The other thing that is happening here is the rate lock effect in mortgages across the country is beginning to weaken, and I'll explain more. This is a graphic that you're probably going to want to take a closer look at. So if you want to screenshot this, you're welcome to. I think this is worth understanding to be able to speak intelligently about. But this, it's a share of outstanding residential mortgages by the rate they had at origination. So you can see the top green is below 3%. Down at the bottom, the red is above 6%. So what do we know? The green's kind of holding steady. The 3 to 4 is sort of coming down. And then as we look at this right now, the ones that are above 6% are rising. That means more people are originating home loans that are over 6%. And I think what we're going to see is that as people go through time, they're going to sell their homes. Less people will have these mortgage rates. So this is something we want to pay attention to. All of these people are not going to stay in their homes forever. They may say that they're going to die in their home and that they're going to stay there forever, but that they're not going to. Some will, but not all of them. So look, we have a great mortgage rate, and we're going to hang out here. I mean, I can't blame them for that. I think everybody in their right mind would want to hold on to a sub 3% interest rate. But also, we're starting to see a shift in rate lock. According to Redfin, more homeowners are deciding it's worth moving, even paying a higher interest rates. Life doesn't stand still. And as we know, people get new jobs, they grow their families, they downsize after retirement, they simply just want to move. So these needs are starting to outweigh the financial benefits of clinging on to that rock bottom mortgage rate that they got during COVID. So I think this is something that we want to be able to be knowledgeable about, and we want to sort of pay attention. We want to pay attention to it, but the share of mortgages with a rate above 6% is continuing to climb to a 10-year high. So you can see that right here, and it's just due to people buying homes at a higher rate. That's just the environment that we're in right now. So not everybody, right? Now, back in 2022, that was about 7%. Right now, it's close to 20%. So we're clearly beginning to see a pretty dramatic shift. Um, so if you start to look at it like this, there are signs that we're in a changing real estate environment. And by the way, I mentioned this before, inventory is continuing to grow. I just got the inventory numbers for last month in October, and the active inventory was above 1 million units. So pay attention here. I put a green box around 2017. Let's see, get out of the way here. 2017, 2018, and 2019. And we're approaching those levels again. Remember, I've talked about we'll end this year somewhere in the neighborhood of where we ended 2017, 2018, and 2019 as far as active inventory in this country. And we're sort of getting back to that level right now, and that in a level we haven't seen really in the last 5 years. So that's something worth noting. Rates are starting to get a little help here, a little bit of the rate lock starting to unthaw inventories. And purchase applications were also down over the week, but still remain 20% higher than they were than where they were a year ago. So I think if you start to look at this, you can start to see, okay, well, we're starting that turn that we've discussed. So we'll go through the end of this year through 2026, and forecasters agree with this. They're saying that we're going to sell more homes next year in 2026. We look at 2024. These are the home sales, new and existing. You had 4.7 million, 4.8 million, and they're projecting 5.2 million homes being sold in 2026. So still starting to make that turn. And I think what we want to pay attention to right now is sort of being a positive mouthpiece, and that will help us with a couple of things here. So I just want to point out that this holiday season, as we start to see people say things about the market, you're just going to see more people in the next several or the next 2 months than you generally do during the course of your work week. So keep in mind during these times of holiday parties, gatherings, Thanksgiving, and all that, that when you see family and friends, and the topic of real estate continues to come up because we know that it's going to. People always want to know what's happening in the real estate market. So one of the things that we want to make sure that we're talking about is that the people want to know how this affects them. The one radio station that people are always listening to is WIFM. What's in it for me? They don't really care how many homes that we sold. They don't care about things that aren't relating to them. They want to know if I were to make a move, is it are homes affordable? I also want to know what's my home worth in today's market. And if we can speak to affordability, improving interest rates, the thawing of the inventory just being stuck with limited options, how that's beginning to thaw. These are all positive things that do directly affect everybody that we're going to be talking to during the holiday season. So just keep that in mind because home affordability is a very, very important thing for us to be able to share, especially as real estate professionals. So there's a couple things that we'll want to talk about. But first, the number of homes for sale has increased in this country throughout the year. So people have more options if they're considering making a purchase. And I also be sure to make sure to mention the 6 months where active inventory is over a million units because that hasn't happened in 6 years now. So the good news is uh, inventory is coming back, which is a good thing. And remember, when people are like, hey, I can't find a home to buy, homes are selling so quickly. Well, homes are coming back to the market. Homes are selling at a more normal pace now. And by that, we're talking about 63 days on market in October. And that puts us back in the range of the pre-COVID era. So if you look in 2020, 2021, The average days on market was down to 43 days on market. I mean, we had here in Central Virginia, homes were selling in hours. But now that's pushing back up over 2 months, and that's a normalized market. So we're beginning to see the return to normalization in that way. So it's taking a little bit longer for homes to sell, but you got to remember that's very normal. A lot of sellers, if they don't have their home sold in the first week, they're like, "Man, what happened? Why didn't we sell this home? Like, why don't we have six buyers lining up to buy our home?" And the answer is affordability is the biggest issue. Mortgage rates are trending down, but there's still some ground to be made up there. But remember, we started off this year pushing close to 7% in terms of interest rates. So now we're in the low sixes, 6.2, 6.3%. And what that means is I told you about $300 per month saved in mortgage payments. And you can see this right here since May, down from a high of over 20, was it 2,800? Your monthly payments, 2,800 down to 2,500 per month. Like that's pretty dramatic. So we want to be able to educate our clients, family, and friends on what's happening. But we also know that not all markets are the same. Real estate is very localized. And right now, even more so, the top 50 markets in the United States that you see here, you have some dramatic differences depending on the market that you're in. Half of the markets are seeing depreciation, half are still appreciating. And if you take that to the top 20 markets, 13 of the top 20 markets have seen slight depreciation. The other remaining markets have seen uh, home values continue to appreciate. So that's certainly a thing that we've got to be able to speak intelligently to. The other issue that we know is that price cuts are also coming back into the market in our price trends. Price cuts. So 20% of the homes that were listed had a reduction in price, depending on what state that you're in. This is certainly true here in Central Virginia. I think it was as high as 25% of homes listed for sale have recently had price cuts within the last 30 days. So that is a factor. So if someone lists their home and it hasn't sold in the first 2 to 3 weeks, we can advise them that it is wise to consider a price adjustment. So on the other side of this, uh, for folks who say they're going to wait for prices to come down, this is a look at the home price forecast. So if they're going to play that out and say, well, I'm just going to wait, 3 or 4 years for prices to pull back a little bit. This is what the projections are looking at. So if you're going to play this out over the next 5 years, the typical home is going to increase by $61,000 over the next 5 years between 2025 to 2030 based on the home price expectation survey. So if you're waiting to wait the market out, thinking that the prices are going to pull back and the rates are going to come back significantly so you can save all this money, this is what you're really fighting against, is the reality of home price appreciation. And over 5 years, that becomes a significant number. So what I'm saying is that people typically understand what's happening, what's happening in the market. So from a median base price, a home in 5 years is going to be worth $60,000 more than it is today. So that's just the reality. So you've heard me ask the question, if you were to go back 10 years and buy a home, would you do it? And that's a great thing. We can ask people that are, sitting on the fence, should I make a move now? Should I wait? Is just ask them, if you could go back in 5 years, 10 years and make that home purchase, would you do it or would you continue to wait? Almost every person is going to say, I would absolutely make that purchase because the benefits so far outweigh the risk. And that's the beauty of real estate. So that being said, this is the type of return that they could expect. And again, there's no promise because there's always potential volatility. But historically, when we look back over the last 100 years, we know that these trends are pretty predictable. So we want to keep those in mind when we're talking with people, especially over the next 6 weeks or so. So again, um, my hope is that this November monthly market watch report helps you to be able to explain what's happening in this market to your friends and family and to your clients. It's always, a great time to break everything down about what's happening in the real estate market. So here's my advice to you. I use this information, use these slides, and get them out to people who have questions or that you may be working with, and anybody that you just simply want to educate exactly on what's happening in the real estate market. And this is a great format to do that. Remember, most agents know what's happening. Good agents understand what's happening, but the great agents are able to explain what's happening. And so that's my challenge to you, is that you continue to dig into this and become the best in terms of educating our clients as we can possibly be. So we'll see you back for the December monthly market watch report. In the meantime, take care. We'd like to see you.